So if you don't get the support you require from any of those packages that are available, the government has also rolled out the Coronavirus Business Interruption Loan Scheme. This is very similar to a scheme that has been in operation previously, where government will underwrite 80% of the risk that the banks take. So the first point here is, on these loan schemes, you as the borrower are 100% liable. Doesn't that effectively you are only liable for 20%. The guarantee is given to the banks and not you as the individual, so you remain liable. When the information was first announced, the banks, certainly the main lenders, the main banks, were still asking for personal guarantees on this lending. There's been a backtrack on this, and end of last week, there were some announcements from the major banks that they were removing the need for personal guarantees for borrowings under £250,000. The scheme is available for loans up to £5 million. Most start at £25,000, which has been another criticism, that some people don't need to borrow £25,000, but that's a minimum that works within this particular scheme. It's still financing. The banks still have to dot the I's and cross the T's, so you will be asked for a significant amount of information if you want to make an application under the Business Interruption Loan Scheme. It means that you will need management information, you will need to give information around your personal affairs in terms of statements of assets and liabilities, and the banks will still go through the usual credit checks that they do. So there's still a time lag. You're still borrowing money that has to be repaid. There was also some clarification that, although was certainly a bit of a backlash that banks were quoting rates of 12% plus, this isn't necessarily the case. A number of the banks have come out and said that their rates will be consistent with what they were pre-coronavirus. But the big thing to be really conscious about if you're looking at loan schemes is the recognition that this is more debt. We don't know how long this is going to go on for. We don't know what the other side of it looks like. So please, if you're looking at borrowing money, think really, really hard about the risks that you're taking on in doing that. It's got to be repaid. Yes, there's 12-month interest-free periods on this, but ultimately you're still faced with a liability that you didn't have 2 months ago. Our team are here to support. We have Justin in our team that's able to support businesses that want to make applications under the loan scheme, but do think really hard about the debt that you're taking on. If you're taking on a loan, you're deferring VAT, you're deferring self-assessment, we're pushing additional borrowings further down the road. So we're very happy to help. We're very happy to look at what the numbers might look like and what needs to happen, but do take time and think about this before you commit yourself to borrowing.